Hey traders, welcome to the channel. Have you ever wished for a high probability trade setup that consistently delivers results? Well, today I'm revealing one of ICT's most powerful concepts, the silver bullet. If you've ever struggled with timing your trades or felt lost in the chaos of the market, this is the strategy you need to know. Stay tuned because I'll break it down step by step with real-world examples. What is the ICT silver bullet? The ICT silver bullet is a precision-based trading strategy that focuses on sniper entries during a specific window of time, and taking a daily bias profile to enter trades for the expansion of the day. ICT himself describes it as a kill shot, a high probability trade that aligns with smart money principles. But here's the catch. It only works effectively during certain times of the day to make it possible for the expansion or big move of the day. Typically, the best silver bullet setups happen between 10 a.m., 11 a.m. during the New York session. Why? Because that's when smart money is active, creating liquidity grabs and high probability trade opportunities. So, having in mind of daily bias, you wait to enter at the opening price or the deep price before price expands for the day. Let's do a quick review on daily bias. Daily bias is well determined, using the previous day's high or low and next drown out liquidity. So when a daily candle opens and closes above the previous day's candle high, it shows that price is more likely to expand high. When price opens and closes below the previous day's low, then it's likely to expand lower because it shows no sign of rejection and suggests trading to a lower profile. Similarly, when daily price took a low and close in above it, that's rejection and suggests that price will be trading up the following day. Apply this in everyday trade and you will see that it works like magic. If you still find it confusing, you can check out our video on daily bias in the description below. Having this daily context in mind, ICT silver bullet is all about finding entry at the opening or the pullback of a daily candle. This is a daily bullish and bearish candle, and this is the representation of the candle in lower time frame. Finding entry around here is what we regard as silver bullet. Let's take an example. This is a daily candle that closes above the previous day's high, suggesting that the next daily candle will be bullish. Going in on lower time frame, we mark out the previous day's high and closing price so that we can enter for long during the active session. Let's wait for what price will say the next day. Your price went straight during the London session and took the Asian range liquidity. Then we should look for enter since liquidity has been swept. Let's wait for confirmation. Wow, a swing high is broken with a fair value gap. That is a sign that the trend has shifted. We place our entry at the fair value gap stop loss at the swing low and target the previous day's high and the next drawn out liquidity. It went to our entry and the expansion begins, went back again and continued. Wow, see that? This strategy can also be applied with smart money concept for a high probability trade. Let's check it out. Here in daily time frame, This candle closed above, signaling that price it intends to trade higher the next day. So we move into a lower time frame. In this 15-minute chart, an order block with a fair value gap was identified. We place our entry at the start of the other block, stop loss at the end of the order block, and target the previous high. That was a sniper entry. So having grasped this, you now know the key element you should watch out for: your daily bias and entry modal, like a shift in structure, change of character, break of structure, and confirmation PD array, like fair value gap, order block, breaker block, etc. The key elements of the silver bullet. To execute a silver bullet trade, liquidity grab is important. The market takes out obvious highs or lows to trap retail traders. Displacement and fair value gap. A strong move in one direction, leaving an imbalance. Precise entry with confirmation, using an order block or the FVG for entry, targeting a logical take-profit level. Let's take one more example. So here, the daily candle was a massive bearish candle, closing below the previous daily candle. According to ICT Daily Bias Profile, when there is a huge expansion candle, price will likely retrace deep before continuing the trend, moving to a lower time frame. 15 minutes to be precise. You see, during the Asian session, price went up deep and finally mitigated an order block and broke a swing low. Price continues, and when the London session opens, price went in there and rejected again, but there was no PD array, like fair value gap, to place our order, so wait for it. Shortly after, a swing low is broken with an order block. Since price have rejected multiple times here, we need to be careful trading in this zone. And that's for that. Replace our entry at the order block. Stop loss above the Asian session to stay safe. Our target should be the previous daily low. Fortunately, price went there during the New York session and started expanding lower. So try back testing this strategy up to 100 times to make you the master of the trade. Why this works so well. The reason the silver bullet works is because it aligns with the power of 3: accumulation, manipulation, and distribution. Smart money first builds liquidity, then manipulates price to grab stops, and finally delivers price to the real direction. This is why retail traders lose, because they chase fake moves. But when you understand how smart money plays the game, you start winning consistently. If you found this breakdown helpful, drop any topic you wish us to cover next in the comments. And if you're ready to take your trading to the next level, make sure to like, subscribe, and hit the notification bell so you don't miss future game-changing strategies. I'll see you in the next one. Stay disciplined, stay patient, and keep executing those high-probability setups. Thanks for watching.